Good morning. This is George Tkaczuk with RCM Wealth Advisors reporting you from the CME Group trading floor in Chicago. Okay, I'd like to talk about the equity markets and the play in equity markets today. Equity markets, the rally continues. Naturally, everybody at this point is saying how high can we go and who really knows. However, taking a look back, you have to look at what's going on underneath the hood. Basically, we have no divergence from the important sectors. Basically, retailers, technology stocks kicked in, home builders, financial stocks, everything's moving in sync. We have the Dow, the transports, everything's moving together to the upside. So it does seem a little bit scary, so it's almost be careful what you wish for. So what do you do with it then? Well, basically I'm a trend follower, so I just like to stay with the trend. Most important thing I think that happened last week is growth stocks started to participate. Basically all year growth stocks have kind of lagged the market. And if you look at the IBD 50, that's Investors Business Daily, where they published their 50 best growth stocks, those stocks are starting to really move over the last week. They've been kind of lagging the market a little bit, and when those stocks tend to move, you're probably going to have a pretty good rally going forward. Okay, and now with this rally going forward, you know, we talked about the drug stocks, the home builders, building stocks, a few tech stocks over the last few weeks, and I have another drug stock that I think is worth looking at, and that's called Santarus, and the symbol is SNTS. Basically, Santarus in January got approved for a new drug, Santarus. It's for ulcerative colitis. They do a few drugs in the gastroenterological space. Another one is Zegared, that's for heartburn. But anyways, the most important thing is back in January, they increased their guidance for 2013 from revenues of $210 million to about $320 million. And last week when they reported earnings, they increased their guidance again upward from about $330, $340 million going into 2013. Now why I really like the stock is it gapped up on earnings up to about the $21 area last Tuesday. And then, however, it sold off to about the $18 area. Big reason was that they going to do a secondary offering of about 4.5 million shares. They priced in about 18 and a quarter, and the stock immediately bounced off that 18 and a quarter, and now it's trading above $20. So I think you can buy this stock right here in about that $20, or if you see it slip back down to the $18 range, it's still buyable. It seems like it's got a lot of support. When you get a secondary offering like that and the stock just absorbs it without any problem, as we saw on Friday, that's a sign of strength and good support. Now, over the last few quarters, the reported earnings up 900%, up 167%, up another 167%. That's over the last 3 quarters. Those are some strong earnings. Revenues came in at about 100%, 65%, up 75%, somewhere in that range. Also very strong. Now for 2013, analysts are expecting over 200% increase in earnings, and then about a 47% increase going into 2014. Strong balance sheet, good cash flow. Cash flow is about twice of what their earnings were in 2012. Return on equity is about 39%. So you have basically a very fundamentally sound company, trending higher, going strong, showing a lot of support. Mutual fund ownership has increased by about 50% over the last year. So you're seeing some good, strong funds supporting the stock. So this is the kind of stock you want to be in. So as always, let price and volume be your guide. Don't take my word for it. Watch price and volume. Watch the general markets. We might get a little back and filling here. But on the S&P 500, you know, we could go to 1,600, 1,570 and be still in a strong uptrend. The NASDAQ, we can, you know, we're above 3,400 now. We could even go 3,300 and still be in a strong uptrend. So have a good trading day. This is George Tkaczuk, RCM Wealth Advisors, reporting you from the CME Group trading floor in Chicago.